BYD's share price has been absolutely hammered, but this has presented an incredible opportunity. It's probably the best time for years to buy BYD stock. The market is scared. The market is acting, I think, maybe irrationally. But if we have a look at the fundamental footing, the fundamental financial prospects of this company, it is really the best opportunity based on the stock price today to invest in a very, very good electric car company, which is also the second biggest battery company in the world. BYD's stock price has, I wouldn't say collapsed, but nearly. I mean, we're looking at a huge drop in the price. Within the space of only about 2 weeks, BYD's stock price fell from $32 to $26. This is a fairly big drop, especially when you consider the fact that BYD's stock price around 4 months ago was sitting at $35, meaning it's dropped by around 37% in the space of 5 months. In fact, 4 months. Why is BYD's stock price crumbling? Is it to do with Warren Buffett and Berkshire Hathaway and them selling the stock, or is it something else? Well, BYD's chairman, in other words, the CEO, has said that BYD will buy back its own stock in order to try to raise investor confidence. This has helped a little bit, but so far it hasn't made a huge difference. It seems as though there's some significant concern on the side of BYD stockholders in China that the price war is going to hurt the company. Hello my friends, welcome to the channel. I'm Sam Evans, you're watching the Electric Viking. To give you some context here, this is what I'm talking about. It's true that BYD is selling really well in Australia. Their EVs are selling really well in Australia, selling really well in Thailand and also Israel. But the truth is those countries are very small and insignificant when it comes to global automotive sales. And when you look at Europe, BYD's sales story there has been a flop. There's just no other way to put it. It's been a flop. I mean, BYD, they revealed new cars in Germany. They have a 1 month of decent sales, and then the sales just basically have evaporated. And the truth is, in Europe, consumers are pretty much shunning BYD because, one, their EVs are not all that cheap in comparison to Tesla, for example, and two, it's a Chinese brand. And the perception is it's just Chinese, and so they don't want it. Apparently, that's what I'm hearing. So unfortunately, BYD are now being perceived in China as having failed in Europe. As a result, you can see a huge crash in their stock price. I mean, just looking at these charts here, it's really a tremendous crash. And what is so shocking about this is the fact that in that period of time, BYD have ramped up sales to the point where they've had month after month after month of growth, just month after month after month. It's been a staggering year for them. And they're now one of the biggest automotive companies in the world. They're going to sell more than 3 million cars this year. Only a few years ago, they were selling only 400,000 cars a year. That is amazing. But here's the thing. The Chinese are concerned that they are too reliant on China. More than 90% of the cars BYD sell worldwide are sold in China. And within the past month, as BYD's stock price has begun to crumble, and as you can see here, very quickly it's crumbled, BYD has discounted the prices of every single model it sells, every single model, and it's got a lot of different models. That could be also a challenge in the future for BYD in terms of, being able to manufacture vehicles at a low price. The more money they spend on more models, well, the more that hurts their bottom line. As a result, BYD's chairman has proposed buying RMB 200 million in share buybacks. But this has come partly as a result of Berkshire Hathaway publicly, or not intentionally publicly, but Warren Buffett and Berkshire Hathaway selling a lot of their BYD stock over the last 6 months. They've sold month after month after month. They haven't done what they did with General Motors. Berkshire just completely dumped GM stock. They still do own a very large percentage, but they are continuing to sell, and that has a lot of people very nervous. Several China-listed companies have proposed or are in the process of share buybacks amid weak market performance, with BYD the latest. When I say weak market performance, I don't mean BYD is not doing well as a company. In China, they certainly are, but weak in terms of their share price performance. BYD received a proposal from its chairman and president Wang Shanfu on the 6th of December for the company to buy back shares traded on China's A-share market, according to a stock exchange announcement from the Shenzhen listed company today. Wang proposed that BYD buy back $30 million in A shares, with the repurchased shares to be used for employee share ownership plans, share incentive programs, or to reduce registered capital, according to the announcement. Now, generally companies do this sort of thing. Alibaba's done it. General Motors just saying they're going to do it, or they've just done it. And generally companies do this when there is perception that that company is in trouble. There's perception that there's some weakness in that company. That's why I'm not a fan of buybacks. I don't believe the market. I know the market will probably respond positively for about a day to this, but in the long term, I don't believe it's beneficial for BYD as a company. The proposal is based on Wang's confidence in China's EV industry and the company's prospects, as well as his recognition of BYD's value to enhance investor confidence, the announcement said. Investor confidence is rarely enhanced by buying back shares of your own company, though. That's the thing. But hey, what are your thoughts on this, guys? Let me know what you think in the comments. The proposal includes BYD buying back shares through centralized bidding at a price ceiling not higher than 150% of the company's average share trading price for the 30 trading days before the date on which BYD's board of directors passed the proposal, meaning they'll likely pay a lot more for these shares than their current market price. The buyback period is within 12 months from the date of the shareholders' meeting to consider and approve the program, according to the announcement. So in other words, BYD's CEO has said to shareholders, I'm proposing we do this, and we want to see what you think on this. So shareholders vote on this. China's A-share market has been very weak this year, with the Shanghai Composite Index down 5% as of the December 5 close. BYD down 24% over the same period. Now, I tend to agree here, guys. I agree with Wang Shanfu. There is enormous potential here for BYD. This is a company that will grow. It's a huge success story. I mean, they've gone from being a very irrelevant company to one of the most successful companies on the face of the earth. But I do understand why investors are concerned that BYD is primarily a Chinese car company. I mean, Tesla receives a lot of criticism for being primarily American, but the truth is Tesla do have a large percentage of their sales outside of America, much, much larger than what BYD do, EV sales outside of China. However, it's worth keeping this in mind. BYD are on the up, profit is on the up, gross margins are on their way up. And BYD's revenue hit a record 162.15 billion RMB, which is growth of 38.5% year over year and up 40% from the second quarter. The company reported a record net profit attributable to shareholders of RMB 10.4 billion in the third quarter, up 82% year on year and 52.6% from the second quarter. But here's the other thing that's really worth looking at. BYD's gross profit margin in the third quarter was 22%, the highest since the third quarter of 2020. BYD's profit margins are incredible in the current economic environment. And considering the price they sell their electric cars for, the fact that they're even making any profit at all is truly a miraculous story. Whatever they're doing it very, very well. At the moment, there's probably never been a better time to buy BYD stock. I'm convinced now is the time. Guys, let me know if you agree in the comments. Thanks for watching.